The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, if you want to find value in stocks, apparently you have to look in the areas of classic brands and freight cars. At least that's what our value strategist Tracey Ryniec is telling us. She's going to fill us in on the details now.
Yep.
So the first company that you're talking about is a company called Helen of Troy.
Yes.
Now, if you go back to Greek mythology, you know that she was always characterized as the most beautiful woman in the world.
Yes, they do make beauty products.
That's what I was going to say.
Yeah.
The name actually fits this time because they own or license some of the most iconic brands of products out there.
Yeah, Revlon and Vidal Sassoon, you know, a lot of the curling irons and hair dryers and hot rollers and things like that that you use are from Helen of Troy.
Yeah.
So that was always been their big area. And then about a little over 10 years ago, I think it was, they acquired the OXO house brand.
Mm-hmm.
I actually just saw an OXO stop in the sink here at Zacks. Like
Really?
it said OXO on it. So they make things like that. They also make, you know, measuring cups. They make those like measuring spoons, things like household good products. The pizza cutters, you would know.
Okay.
You see them in the stores.
Okay.
It's a
I'll
really
take your word
popular
for it.
brand. Yeah. And then recently they just expanded into a whole nother area of the vitamin supplements. They just acquired a company that does that. So, you know, they're kind of expanding into all these consumer-oriented areas to get out of being solely a beauty supply company.
Mm-hmm.
And, you know, that's really helped their estimates. Estimates are rising on these acquisitions, and, you know, the consumer is out there purchasing all these little things they didn't. Either they waited before and now they have some extra spending money, gas prices are down, so I might buy that new flat iron or hair dryer now that I have a little bit extra spending money.
Or they're just spending anyway.
That's true. That's the American way, right? So yeah, the Helen of Troy is expected to see about 39% earnings growth this fiscal year. They're in their third quarter now, fiscal year, and then another 10% next year. So for a company that, you know, not many people really pay attention to, that does just kind of these products you use every day, that's some good growth. They're also trading about a little over 12 times, so they are a value play here. They're cheaper than, you know, most things I've seen out there. You can see on the chart I put up here, shares have pulled back a little bit, and so they're a little more attractive than they were before. They're off their highs. So yeah, Helen of Troy is an interesting Zacks #1 right here.
Okay. And then in the freight car category, there is Greenbrier Companies. Now,
Yes.
they actually build new railroad freight cars.
They do, and then they maintain them. They have 4 manufacturing facilities in North America, and they also have about 38 like maintenance, refurbishing facilities. Those are running full throttle right now because if you have an older freight car or a tank car, it costs a lot to buy a new one. You definitely were doing the maintenance on it. I've talked a lot about the rail cars recently, and I know it hasn't been that long since I've talked about Greenbrier, but because of the oil slump, everybody's been selling off these rail car makers because the thinking is if nobody is drilling for oil in the shale areas where all the tank cars are being used, then no one will buy any tank cars. You can see on the chart I put up here, the stock has been slammed down. Basically, it's getting crushed almost every day. This is making it an extreme value. It's trading at 10 times. That's well under what the S&P 500 is trading at. It's cheaper even for this company that has been cheap. So got extreme value, but you know, I know people are concerned, won't people stop buying the rail cars? They may, but this kind of company has a backlog of orders. And as of the third quarter, which was the end of August, they had a backlog of $3.3 billion. It's their highest backlog ever. Most of those are non-cancelable contracts. So for over the next 18 months to 2 years, we pretty much know what kind of earnings this company is going to make. So if you see on the Zacks consensus page, there's been no cuts in earnings over the last 30 days for either this year or next year for this company, which is kind of surprising. Most people, it goes against what you would think if the stock is selling off. And we have a lot of estimates on this company. We have 7 for this year and 8 next year, but none are being slashed. If anything, they're going up. On December 8th of this month, they actually announced that they got even further orders in, and 2/3 of these new railcar orders were not energy related, just to make us feel better. Didn't help anything. The stock's still selling off. There's just panic selling in this. I still really like the railcar story. You have at least 2 years of earnings that we know what they're going to be that are out there. You know, I always hear, well, if these are non-cancelable contracts, you know, maybe the people who are ordering the rail cars will just say no, we're not taking this. But the people ordering them are like the big railroad companies. They're not going anywhere, so they will honor these. Now, in a couple of years from now, we may see a glut of tank cars, not on the freight side, but on the tank car side, if oil stays extremely low and the drilling doesn't pick up in the shale regions. But nobody knows that yet, and that's several years down the road, and the companies have said this. So I still really like the rail car plays. They're holding on to their Zacks rank. Greenbrier is still the #1 because no estimates are being cut. They're going up, if anything.
Right.
So as a value investor, you really have to look at some of these kinds of opportunities. I've talked a lot about energy stocks in general. I think it's too early to get into some of those, and those estimates are being cut. And so we're seeing ranks of 4s and 5s on those. But with these rail car makers, it's a good story. And in 2015, in the first quarter, they're expecting to get new regulations from the government. This actually helps them because they're going to actually demand higher standards from the tank cars because of some of the accidents that have been on the rails. So when that happens, people with older tank cars either will have to have them refurbished, which helps Greenbrier. That means their maintenance facilities will be busy, or they have to buy new ones. So the story's still good.
Yeah.
I know there's panic, but you know, I like the rail cars. I don't own Greenbrier, although after talking about them, maybe I should be buying it myself. But I do own their competitor, Trinity, which is a little bit larger company, but it's the same similar story over there.
All right, we'll see how it plays out. What about Helen of Troy? Do you own that one?
I do not.
Okay, check out other stock information if you're not watching this video at our website, Zacks.com. If you're watching it in syndication, you can just get over to our homepage. You'll see stock picks, stock commentary, stock picking strategies, and more. Zacks.com. Link to it all off the homepage. With Tracey, I'm Terry Ruffalo.